some of the most common FUD or doubts I see about Bitcoin, and it sort of comes around like clockwork, just like sort of how China seems to ban Bitcoin in cycles as well. It's the USDT or the Tether situation. So for the people that don't know, Tether is now by market cap the third largest cryptocurrency, and the story goes that they artificially inflate the Bitcoin price by printing unbacked USDT and refusing to get audited. In your opinion, does this affect Bitcoin in any way, and is it a legitimate threat or a potential black swan event that investors should sort of be worried about?
If you're an investor, I would say that that means by definition you should have a time frame of 10 years, and that means no, you shouldn't be worried about it. If you're a speculator or a trader and your time frame is 10 days, 10 hours, or 10 minutes, then yeah, it could move the price around. But what is it? It's FUD. I mean, the Tether is FUD. It's all FUD. And let's come back to the key point. Bitcoin's not a cryptocurrency. Bitcoin is a crypto property. It's digital property on a decentralized crypto network. Tether is a digital currency. You could almost call Tether a cryptocurrency. And it is much more akin to a decentralized, or it's a money market fund with light or no KYC AML, competing with other money market funds. If you're buying Tether, you're taking money market fund risk. I mean, the people that operate Tether in theory might invest your money into credit instruments that they default on. So you've got some kind of credit risk, like you invest in a centralized money market fund. And then you've got the regulatory question of, will the US Fed or the Treasury or the EU decide that Tether is violating, banking money transfer rules because it's on crypto rails? And those are the two risks you accept when you're buying Tether. Tether's one, it's the leading digital currency. There's DAI, there's Circle. I mean, there's a lot of other the digital currencies, and they compete with centralized currencies. When my company bought billions of dollars of Bitcoin, we never used Tether. We wired dollars into a bank and we bought Bitcoin. So all of the institutions that can wire dollars around the world will wire dollars or euros into an exchange. They will buy Bitcoin. And I could care less about Tether, right? It's a joke. People are like, well, what if Tether does? I don't care what Tether does. Tether is a money market fund. Tether failing concerns me no more than any other money market fund failing or any bank failing, right? If a bank has $50 billion in it and it fails, why doesn't that support Bitcoin, hurt Bitcoin? Well, in the near term, it might, right? In the near term, anything can create a crisis. But at the end of the day, the key is to understand that Tether is a digital currency, and it's really a money market fund, a decentralized money market fund in cyberspace. And Bitcoin is digital property in cyberspace. If you own 100 city blocks in New York City and some bank that has billions of dollars in New York goes bankrupt, do you care? Probably not. If you found out that someone used Tether to buy blocks in New York City, okay, well, hopefully they bought the Bitcoin before the Tether failed. If they didn't, then they have an issue. I really think that most of the Tether FUD is primarily being driven by other alternative stable coins or altcoins or someone else that has an agenda where they're hoping to replace Tether with their own altcoin. It's just competitive FUD that's spread because people can spread it. It's like if I ran a bank and you ran a bank and I wanted to create a run on your bank, I would say, I heard that Jamie's bank was not audited. So I'm hoping that they'll take money out of your bank and put it in my bank. And there's just a lot of that competitive maneuvering that goes on in the crypto industry, primarily because the crypto industry is not a security. So a lot of this stuff wouldn't happen if you were securities, because you have securities liability, civil and criminal liability for spreading those rumors. But in the crypto industry, it's unclear who the regulators are and whether or not you have any liability. So people say things more freely.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
Yeah, no, that definitely makes a lot of sense. I like that. Just while we are on the topic of FUD, and just a final question on it, the most recent FUD that I've seen circulating on Twitter and Reddit is that if the Bitcoin price dipped to a certain point, there seems to be a notion that you would be forced to sell or liquidate any of your position or MicroStrategy's Bitcoin. From my understanding, as you are a majority stakeholder of MicroStrategy, this is not the case, but I just wanted to ask you and confirm with the source, is there any situation that you would be forced to sell the holdings of Bitcoin?
No. Yeah, that's just FUD. The situation is MicroStrategy has some senior debt. That's $500 million of debt, and it's secured against the cash flows of the software company. And there are no conditions of default. It's a bond. So if the company didn't generate cash flow, the debt wouldn't be in default. It's unrelated to Bitcoin. We pledged some collateral, or Bitcoin as collateral, to make the bondholders feel better. But if the Bitcoin went to zero as collateral, there'd be no condition of default on the debt. So the $500 million of senior debt has no conditions of default. It's just, other than we got to pay the interest on it, which is $30 million a year. The company generates a lot more than $30 million a year. So there's no conditions of default for that. There's $1.7 billion worth of converts. They're not secured. There is no collateral posted against them, right? And they're convertible to equity, and we can convert them to equity. You know, there is a time frame involved, but the Bitcoin is not pledged as collateral, so the price of the Bitcoin is irrelevant. If Bitcoin went down by 80% or 90% or 95% or 99% or whatever, it just doesn't have an impact on that debt. That's long-term financing. So. And then the last point, so people think, well, if Bitcoin went down 90% tomorrow, we would just be waiting, right? And then people think, well, the board will make him sell or do so. They're like, oh, blah, blah, whatever. I have the majority voting stock in the company. I have 70% of the voting shares in the company. So no, I don't think that's going to happen. And the company has a strategy. The strategy is acquire and hold Bitcoin. So our financing is permanent. And it's the way you get yourself in trouble with financing is you basically take a margin loan that's marked to market every minute of the day, and you have to post additional collateral if you fall below that margin. We don't have any of that financing. You know, we have mostly equity, convertible financing, which is unsecured, and then a little bit of senior debt, but the senior debt is, again, secured against the intellectual property and the cash flows of the company. That's why we were able to do what we did. So ultimately, the Bitcoin price will be volatile. I watch it, if a decade from now it didn't go up, it won't have been the best strategy, but what it does day to day, week to week, month to month, even year to year isn't really that relevant. We have a long-term strategy here.
Yeah, fair enough. I remember seeing it and just thinking it was ridiculous. And to my understanding, that was the case. But it's just, I don't even know where people come up with that, the sort of narratives that I see spun around and spread on Twitter.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with firsthand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.